The world watched in disbelief. A single number, 6 figures, flashing red. Bitcoin at its peak. And then, a sharp crack. How did the king of digital money stumble this hard? How could something built to outrun gold and bonds suddenly fall behind them? This is the story of the great Bitcoin crash of 2025. For years, Bitcoin was the wild frontier. Digital gold, they called it. A hedge against the old world. And in early 2025, it blasted through fresh highs, soaring past $126,000. Gold and bonds move slowly, cautiously, like they always do. Picture a hare sprinting ahead while the tortoise plods along, steady and unfazed. The hare looked unstoppable. But something changed. Let's break down how this beast actually works. Bitcoin isn't backed by a country. It isn't backed by a vault. Its backbone is code and trust. Its price shaped by speculation, adoption, and raw expectation. Bonds and gold? They're slow, yes, but they're anchored. Bond yields rise with interest rates. Gold carries thousands of years of emotional weight. In 2025, two massive forces turned the tide: macroeconomic pressure and shifting market psychology. First came interest rates. Higher rates make bonds more attractive. When bonds start paying better, investors pull money out of riskier assets, and Bitcoin is the definition of risky. Then came leverage, mountains of it. Bitcoin's climb was turbocharged by borrowed money. But leverage cuts both ways. When prices fall even a little, forced liquidations hit like a hammer. And when they hit, everything collapses at once. Then came the breaking point. October 6th, 2025. Bitcoin peaks around 126,000, and just weeks later, it slips below the 100,000 mark, officially entering a bear market. Billions of dollars in long positions, wiped out in a single day. The narrative shattered. Bitcoin was no longer the untouchable giant. Suddenly, the once boring tortoise, bonds and gold, didn't look so foolish anymore. This wasn't just a dip, it was a reset. And the consequences rippled out. Institutional investors stepped back. Risk models were rewritten. Bitcoin, for the first time in years, lagged behind the very assets it was supposed to replace. Gold gained steady ground. Bonds looked safer. And the message to the world was simple. Even the fastest asset can stumble. Even the modern miracle can fall behind tradition. So what's the lesson? That speed doesn't guarantee safety. That no asset, not even Bitcoin, moves independently of global forces. Inflation, interest rates, liquidity, fear. They pull every string. The crash didn't kill crypto, but it humbled the myth. The uncomfortable truth is this: sometimes the tortoise wins, and the hare, no matter how fast, is the first to trip. So tell me, will Bitcoin reclaim its throne? Or has the tortoise already crossed the finish line? Let me know in the comments. Please like and subscribe.